Okay, we're back for the weekly outlook on the Nasdaq for the 5th of October 2025. So here on the daily chart, you can see that we've still carried on through this price run, going higher from this gap, and this gap. We immediately rebounced the one that we were looking at in Friday's stream, but then we do trade lower into this fair value gap. So that's a TGIF because Monday, Tuesday, Wednesday, Thursday, or Monday, Tuesday, Wednesday, Thursday, we'll trade higher, and then we get about a 40% retracement on that range on Friday. In all-time highs, you generally don't want to be looking for TGIF because, well, you would be selling against the premise of all-time highs. And in an all-time high market environment, you just want to let it trade lower and then buy it back up into all-time highs. So this is the grading. As you can see, each of these fair value gaps have a grading on them, where we have these levels. It's just the quadrants. So here we trade all the way past the lower quadrant of this fair value gap. I see this down close candle from Friday performing as an order block eventually, so I want to see us trade back above this, give us a change scale delivery, and then keep trading higher. From this high, the retracement all the way down to this low is a mitigation block. So we have this low, this high, and this higher low. So the market structure here is low, high, higher, low. That makes this a mitigation block. When you measure that entire zone from the high to the low, that little retracement, you can use a fulcrum or standard deviations to look at expected distribution or distribution expectations. So we have this 1.5 level on our fulcrum here. That's a level that we can look at for distribution, meaning if we're expecting high prices, we can probably see this be reached as a relatively safe level. But low-hanging fruit would of course be this elongated wick up here. I don't expect us to just trade back up there on Monday. And the reason for that is because we don't have any high impact news. But of course, it is possible. With the US government shutdown, there isn't going to be a lot of high impact news released. Like last week, we didn't have any non-farm payroll data. This week, there's nothing on Monday and Tuesday. And the rest of the week is going to be mostly tentative, except for an FOMC on Wednesday and that Powell speech. But when it says on Forex Factory tentative, it just means that they really just have no idea when the news is going to come out. So because the US government shut down, all the employees who were doing these data releases, they're no longer active and they're no longer working. Meaning basically the dollar is going to be held in consolidation for the most part. It's not going to be moving as it should. Conditions are going to be less ideal than ordinarily they should be at this time of the year. Because October is usually like a nice, decent month. But with the US government shutdown, no one really knows what to expect. We're in a sort of no man's land right now, where it's very hard to predict the marketplace. Of course, we're in all-time high, so it's very easy to just say, okay, buy it up, buy. It's going higher and higher and higher. Correct. But, especially if you're trading Forex, and the dollar's being held in such a way, like it is right now, and we'll talk about that right at the end of the video, it's very difficult to make any predictions on price. Okay, so this is the 4-hour chart, and we're still looking at the daily fair value gap and this mitigation block. So that fair value gap was reacted to from the consequent encroachment level. As you can see, almost to the tick, trades higher, creates our new all-time high above these relatively equal highs, which we mentioned in Monday's analysis. And then it's traded back down into this mitigation block. This is TGIF. Mitigation block can also be a drawn liquidity because anyone who's selling here, their positions become underwater when we trade above it. So that can be seen as a drawn liquidity when we trade back into it. And we have traded into it and respected the high of that candle. The mitigation block in this case, I'm not drawing it from the high to the low. I'm drawing it just of the high and low of this candlestick, because this candlestick is the one that creates the high. So I can use this entire thing to get a good, accurate measurement on the mitigation block. You can extend it to this next candlestick, or you can extend it all the way down to this low, but then you're really just looking at, in my opinion, too broad of a lens, whereas if you do it like this, you're really refining it and you're getting a better magnifying glass of what you're specifically looking at. So I want to see this give us some kind of support to trade higher on or in next week's price action. Okay, this is the hourly chart, more of the same really. Again, we're looking at that daily fair value gap, trades into consequent encroachment, trades above the original consolidation here from that weekend, and as you can see, that TGI retracement goes into this PD array, and we do have a breaker block here. We also have an SMT between Nasdaq and ES, which we'll look at now. As you can see, this is the ES on the 1 hour chart. We have this high and then this higher high, whereas on Nasdaq we have this high and this lower high. So that's an SMT. It could incite more of a run lower, potentially into a little bit further of this mitigation block, maybe even all the way down to the low, maybe even all the way down to this low. But I'm not calling that. I'm just going to let that happen, and then whatever happens when we get that reversal pattern that we talked about so much in the silver bullet mentorship, and we can get that on like a lower time frame in a significant session like the New York session, that would be a good buying opportunity. Okay, and then finally the dollar. As you can see from last week, we got a much deeper retracement than expected. We wanted it to trade up into the draw, but with the US government shutdown, there really isn't anything to really expect from this. We're still respecting that daily fair value gap. We're still respecting that lower time frame breaker block. We didn't quite fill in the fair value gap entirely, but that's okay. And then we also wicked into that other fair value gap. But the thing I want to see regarding or from my technical analysis is to trade all the way up into this draw liquidity and then this one and then this one and then the bounce price range. But fundamentally, what's going on in the world right now? Well, the US government's literally shut down. So the dollar's not going to be a reliable correlated asset that you can look at. So if you're using this against your euro dollar, pound dollar, or the Nasdaq, it's not as reliable right now because of the conditions that it's in. Trading in general, if you're trading anything related to the dollar, like the Nasdaq, it's not going to be as reliable right now. So I'm of the opinion that you shouldn't be really trying to force anything and absolutely de-risk, completely de-risk, where you're risking like a half of what you used to be risking. Now, I'm not trading at all until the government's back up, and I'm okay with that. I'm perfectly fine with just waiting and waiting and waiting. It doesn't bother me one bit. But I understand that some people just want to put trades in. So my advice is, if you're trading the Nasdaq, which would probably be like the better thing to be trading right now over Forex, because if you look at Forex's price action over the last week and you just zoom out on a 15-minute chart, it's a very clear seek and destroy week, not just a day, an entire week of seek and destroy price action. But I would recommend the Nasdaq as of right now because it still has that little bit of independence and the other correlated assets like ES and YM. But don't be putting ambitious expectations on your results right now, because if you're expecting it to trade and you're aiming for huge profits, in the current climate it can really just do anything. So unless you have a glaringly obvious setup, don't be trying to force a position, don't be trying to get in a lot. Keep it very minimal and be nimble in your positions. So you want to be able to close it very quickly. That means taking profit at low hanging fruit objectives. Unless you can really, really easily foresee a price run back into all time highs, I would recommend, doing the very least in this current market condition. But that is it for this week's weekly outlook. Thank you for watching. Hopefully you've come away with something, and I'll see you next week. Or I'll see you in Discord. Goodbye.